Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, July 26th, 2010. Well, folks, the markets are trading higher again today, but into some major resistance on the daily chart. And that's what I'm going to start the video with today because I think it is probably the most important thing we have to look at today. First off, volume is very light. 110 million traded on the SPY as we approach 2:30 p.m. Eastern Time. But if you scan over here and take a look at the chart, look at, again, the 200 moving average on the daily chart, and look at the market moved up right into that level on the lower end side. So again, understand that that is resistance right now on the daily chart. Until we clear that, we cannot advance onto this next level, which again is at a current price of approximately 113 and a quarter. So again, 200 moving average right here at 111.50. If you break through that, you should be moving up to the 113.25 level on the SPY. Now, if we go to the 60-minute chart, I want to show you this as well. This same level is very, very key, and you can see it right here, 111.35 to 111.50. That's again what we're into currently as we pierce the 200 moving average on the daily. But by scanning back on this chart, I want to show you a couple different things. These little pivot tops coming right into play here at the 111, 111.50 area as well. And if you continue to scan back, you get a nice little gap area here, and I'll zoom right into it. See this gap right here? That's another key level that we came right into as well. So understand that there are multiple levels that are very key in regards not only on the daily chart, but on the intraday 60-minute. Gap fill right here at 111.50, which again is a very important level. And again, we talked about the other levels and the extension move on the market over the past couple days. Now, I'm going to go over a couple other things as we're looking at the intraday 60-minute. You can see again a stalling. Now, what pattern this is ultimately is a consolidation pattern in a bullish manner. So just be aware that you're consolidating up against this 111.35 to 111.50 level with a slightly bullish hint to it right now. That could change by the afternoon session depending on how things play out in the last remaining portion of the day. Now, the markets are up again on today. Remember, on Friday we had the late day rally on the back of the Euro bank test that, again, 7 banks failed out of 91. It was kind of a floozy of a test, if you ask me. Not very productive because, again, there was such a light test on these banks. But you have to look at it and say, in general, that's one more thing that's past the market now. Not only the European markets, but also the U.S. markets. They don't have to worry about it. And until we get some breaking news of a new bank failure or a new crisis in some country out there, the markets seem content to float sideways to up. So again, yes, we're into resistance, but the volume is so light today, I do expect this market to hold steady and most likely maintain the gains today, maybe even moving up a little bit higher into the close. All right, let's go to the intraday 10-minute. We'll focus on that next. Here's your 111.50 level. Now, remember, this level corresponds with the daily 200 moving average I started out with in the video. And you can see really the volume is just keeping this market very dead. There's almost no movement here on the sideways motion. You're hugging the 20 moving average. And again, if I want to zoom in just a little bit more here, we'll zoom in on the charts. You can see this 20 moving average is keeping the market up, and it's really getting squished. The market right now and the price of the SPY is getting squished between the 111.50 200 MA on the daily chart and this 20 moving average. At some point this afternoon, you're either going to break down below this 20, in which case you could fall down to maybe this 50 moving average, or more likely, based on the volume, you'll break through 111.50 and head a little bit higher. All right, so keep a close gauge on that in the afternoon session. Volume is minuscule, and again, I have to continue to repeat that because it is a very important factor in this market right now. Now, what stocks are in motion today? What are we seeing across the board? First of all, the small caps are on fire today. We've seen multiple small caps, including small cap Chinese plays, continue to advance. Now, again, for those of you that are premium members, not only have we been calling out great trades and giving perfect turn dates in the market for analysis and for key plays to make money on both sides of the market over the last multiple month period, but again, just recently I highlighted multiple Chinese stocks that looked like they were at their dead lows. I highlighted last week how the Chinese government looks to be loosening its grip on the housing market in China, which again will increase commodity demand and help their economy grow even faster there. So with those factors, you had to like some of these small cap China plays, like CNAM. We talked about CNAM here, has continued to move up just from Friday's action, basically up from $3.40, now hitting a high of $3.80. And if you go to your daily chart, you can see again, it had a huge fall down, and right here is where we want to look at it and look at the move up right into the 50 moving average today. From basically it went all the way down to a level of 290, 275 area, and then again back to about the 380 level. Basically 30% plus gain on that stock recently. Zoom is another one we picked up. Zoom is one that I gave the Research Center subscribers in the hot charts and alerts, which again is included in the hot charts and alerts amongst all the Research Center subscriptions there. It's all included under that $49.99 per month level. But you can see here, beautiful pop. We bought this down here at this level down here, $4.75. Continuing to hold it, it's trading at $5.18. Beautiful in spirit of bull flag for another possible pop up to that 50 moving average. That would be short-term target right there at around $5.40. And if it gets through that, it could easily go up in this range to this level. So again, you can see these Chinese stocks really starting to wake up here after the market has such a big rally, and also that news out of China from last week. All right, what other plays are there? There's SKBI. That's another favorite of mine. Beautiful move up today, trading up 20 cents. Look at it coming off the lows. The stock used to be $12. It's trading in the $6 area. Could easily go to this level, the 50-moving average on the daily chart, which is at just over $7. And again, you can see the resistance right here and here. That would be a key resistance level if it gets there. Then if it gets through that, you have gap fill upwards of 780. And even that, think about the drop that it's had. Not much of a move back. Very small, in fact, in terms of where this thing could go. Now, what other plays are there out there? I mean, there's a bunch of Chinese plays. One of the other ones that I like is NPD. Look at that bottoming pair of the chart. Take a look at that consolidation we've seen underneath the 20-moving average. Today, if it closes up here, it will be the first close above the 20-moving average. In my analysis, that would be a key breakout with a target of the 50-moving average at around $3.45 to $3.50. That would be a first target, and then ultimately you could see it advance even further. So watch these small China plays, and a bunch of these are ones that I've given and that my members of the Research Center and Intraday Stock Chat have picked up over the last few days, and we've been accumulating at the lows and are now in the money on every single play that I've given out in the Chinese area that I've bought personally. We're all in the money based off the entry price that it was given. What other stocks? Let's take a look at some large caps. The Chevron here. Chevron and Exxon are really leading the charge today. Of all the plays out there that are key market movers, you have to say that Chevron and Exxon are leading the charge. Chevron's up 77 cents today, and Exxon Mobil, if we take a look at XOM, let me punch that in for you guys. ExxonMobil is also up about 50 cents. Now, the key with Exxon is it's right into the 50-moving average, and that is going to work as some resistance. Notice how the 50 on Exxon basically confirms that the spiders, which again is the overall market, is also into key resistance. So we talk about market-leading stocks like Exxon, and Exxon's into resistance, therefore chances are the market's into resistance. And if we flip back to the SPY, you can see it's confirmed. Look at that. Beautiful little hit of the 200, and notice the market pulling back just a little bit here, just a little off that 200 today, and that's expected. Remember, keep in mind, you're hitting a key level like that, you probably are going to see a pullback on the markets, at least for a day or two, before it has a possibility of getting through that 200 moving average. Again, Chevron continues to look very nice as well. Chevron has a possible further upside, maybe to the 200, but again, based on the spiders hitting some key resistance levels, I wouldn't get too happy about that or too excited about it until we see a little bit of follow-through on the SPY or on the overall markets in the next few days. Overall, you have to anticipate, again, a little bit of a micro pullback possible in the next day or so, just as this market, again, is a little on the extended side into a major moving average on the daily chart. Other stocks in motion here today. Take a look at Apple. Apple's down about $1.63. In all fairness, you could actually look at this pattern and say it's an in spirit of bear flag. And just to remember, bear flags are negative, obviously. Here's a little bit of a top pivot from the day it had earnings, and off of that, it fell all the way back down like this. And then from that point on, you've made a slight sideways choppy inside bar inside of that big drop bar. That is considered an in spirit of bear flag with a possible target fall to this 50 moving average, and then ultimately gap fill would be just below that. This general area is where I would expect this thing to go. Probably in the next week or two, it comes down and fills that gap. At least, again, that would be the basis of what the chart is telling us. All right, other than that, folks, let's just take a look. Goldman Sachs is flat on the day. JP Morgan is having a decent day, up about 28 cents. This is the intraday chart of JPM. And again, folks, notice how it initially sold off this morning, but then bounced nicely, and again is falling down just a little bit. We are seeing some selling in this market, just minor selling right now in the afternoon session, coming into the close on spot crude. And overall, again, Google is down about $5, Baidu BIDU is up about $2, and markets continue to fly up and down, but overall trending higher today on the markets. And again, just to do one quick check of the markets, we see the Dow up about 59, 60 points, NASDAQ is up 15, and the S&P 500 is up about 7. All right, folks, again, the winning plays continue. If you want to get involved, you got to join the Research Center. Research Center for $49.99 a month includes everything listed under that Research Center. Otherwise, if you want intraday analysis, play-by-play, and constant calls, both on the swing trade and the day trade side, the chat room is for you. Take care, folks. We'll see you soon.